Good morning. Happy Friday, guys. Sarah here. Thank you for tuning in to my show, Bank on Women, where we talk about financial literacy. Yes, another episode. If you don't know, please mark your calendars because I'm on every Friday, 10 a.m. Eastern Standard Time. And today we're going to be talking about mind-blowing steps any entrepreneur can take to raise their business credit scores. So really quickly, if you haven't already done so, please join the She Is Still Dope Network, who has me on a weekly basis. It's definitely women from all denominations and all walks of life. They're all, listen, we're international, so you'll find a little bit of everything on the website. What I want to emphasize is how they are so dope for allowing women like myself share from different subject areas and pour into you guys. So again, thank you for tuning in. If you haven't already done so, join at Biz Credit Builds, or I am Sarah Sabastro on Instagram. I'm going to dive right in. Feel free to comment. Thank you for attending, and let's jump right in. I'm going to be sharing my screen, so give me a second, guys. So, mind-blowing, simple steps that any entrepreneur can take to raise their business credit scores. So, business credit scores, what are they, right? There are scores that are in the business name. A business builds its own credit profile and credit score, and then the business will then qualify for greater credit, right? This is the measure of a business ability to pay, and not only the owner's business measure, but the business's ability to pay. So the way that we do it is we do it so that it's not tied to your personal file. So if you ever have to, God forbid, dissolve that business, all of your debt, all of that credit goes with that business credit profile, and it doesn't affect your personal. So most major business credit scores range from 0 to 100. But your business credit score isn't automatic, right? There's some things that have to be done for you to even get a score. And what most people don't realize is that unlike consumer credit scoring, there are different requirements. So you have to apply, right? You have to get an EIN from the IRS website. You have to have a DUNS number from Dun & Bradstreet. Normally arrives within a few weeks. 7 days if you do it online. You have to tally up separate payment experiences. And then D&B starts tracking your business financial ability and your paydex score, right? And your paydex score is driven by your ability to pay, like I mentioned before. For other business credit reporting agencies, no payment experiences are necessary for them to give you a score. But for business credit, right? The ones that we're looking at, which is Experian, Equifax, and Dun & Bradstreet, that paydex number, your experiences are necessary. You won't pop a score unless you have it. So, business credit score, a mathematical model generally used to depict a business risk, right? So most creditors, what they want you to understand is that without a credit score, you're looked at as a large risk, right? And before you even get a general score, they have a grading system. So they will say A, B, C, or D, depending on if you're starting to build your profile, how many employees you have, if you have a virtual address or a physical brick and mortar versus a residential address. There's a number of factors that go into this mathematical model. So if you go 90 days late on an account within the 12 months, that affects that business credit scores. Business scores, it differs from your personal credit scoring, which depicts risk over 24 months, right? So they look at literally what your behavior is, and with analytic software, they can tell ahead of time whether you're going to default, whether you're going to dissolve your business, whether you're going to be late ever. They kind of tell you that ahead of time. So this is a little different. They basically are looking at the risk. Are you a risk of losing your business? Are you a risk so that if we lend to you, will you be late? So they're looking at that risk, and that risk score essentially, it tells them how much to lend you. So if you pull up a real Dun & Bradstreet report or credit safe report, there's a recommended lending amount, and the risk is what drives that recommended lending amount. So if you're seen as a risk, right, they're only going to give you a little bit of credit. But if you are making payments before time, if you are essentially not having a lot of inquiries or haven't opened up a lot of business accounts, right? If you don't have any negative late payments on there, then guess what? Your business credit scores go up, your risk score goes down, and your recommended lending amount goes up. So there's a lot of things that tie into that mathematical model. Business credit scores depict how likely a business is to default on payments, right? So like we mentioned, the personal credit scoring, that depicts your risk over 24 months, but the business credit score is a little different. They are looking at how likely the business is to default on payments. It has nothing to do with how you pay your own bills. They're not looking at your personal. They're looking at your payment experiences on the business side. Now, all credit reporting agencies show multiple business credit scores to evaluate different forms of risk. So it all depends on who you are applying for. So if you are applying for a business creditor, you should always ask, or it's your right to ask, who do you pull from, right? Some people say Experian, some people will say Equifax, some people say Dun & Bradstreet. So it all depends on who you're applying for. But all of your business credit data, right, across your business credit reports should match. That's the key to getting approvals, auto approvals at that. Now, these scores are usually used by credit issuers, lenders, suppliers, and vendors, and others who typically extend credit to businesses. There is no Fair Credit Reporting Act for businesses, so you cannot complain on nobody. You cannot go file a legal complaint saying, hey, they did not comply by the Fair Credit Reporting Act, right? So in personal credit, there's this Fair Credit Reporting Act, and they have to report accuracies, right? If there are any inaccuracies, they have to delete it totally off the account. So business credit is a little different. So on the business credit side, right, vendors are under no obligation to tell you which scores they are relying on, and they don't even have to tell you why they denied you. So if they do, they do it as a courtesy. So what I'm telling you is that be mindful that they are under no obligation to tell you why they made the decision that they made, and they are under no obligation to tell you which scores they're relying upon to make a decision. So just keep that in mind. If they do it as a courtesy, and it's normally a letter in the mail within 7 to 10 business days, but they don't have to tell you anything. They can just deny your file. Anyone can pull your business credit reports. Normally, if you want a real report, there's a cost behind it. I always recommend NAV, N-A-V, www.nav.com. And literally, it's basically like the Credit Karma, but for business credit reports. I'm going to put it in the chat. Give me a second. This is a live recording, and you can look for it and view a playback if you like. So give me a second. I'm going to put in this chat. And again, NAV is great to, I get a paid subscription. And the great thing about NAV is that you can literally track all three of your business credit scores, and it also reports as a trade line. So it helps you build business credit. All right. So back to business credit, right? Scoring. As I mentioned before, there is no Fair Credit Reporting Act, and you never know who may be looking at your credit scores. So keep in mind that these scores that you get once you get a Dun & Bradstreet number, EIN, and you apply across for vendor credit, that they can use, they can be used not only for vendors, lenders, or creditors, but also for competitors, clients, and business prospects. So what do I mean by that? I mean that literally, because this information is public information, when your competitors are looking at your Dun & Bradstreet profile or your business credit scores, they can essentially, if you put on there your financials, they can see that. They can see where your office is located, sometimes your target audience, how many employees you have. So there's a lot that goes into a business credit report. So keep that in mind. And the more information that you have across your reports, the more accurate it would be. And I mean, business prospects and clients, they look at that as a good thing, because they can essentially say, hey, last year, this business did this much business, and they're in a construction business. We sell construction supplies. So then they'll start targeting you, and you'll start getting notifications saying, hey, we know that you are in the business world and you do construction. We'll extend you a line of credit because I know you do this amount of business per year. So there are positives to it also. 3 big credit reporting agencies for business credit. As we mentioned before, Dun & Bradstreet is just for business. A Dun & Bradstreet number is free, so do not pay for a Dun & Bradstreet number. Experian and Equifax are both for consumer and businesses, but we're looking at it on the business side. And there are smaller credit reporting agencies that aren't checked as often, but they do check, right? The big 3 matter a lot more, right, than the rest. But there is more to consider, right? Credit Safe, I mentioned that before. And I use Credit Safe, right, a whole lot, because I can report my clients, if they have a business lease, their lease payments, right? Their payments to business credit cards. There are small term loans that do not report. So it costs to report to Dun & Bradstreet, Experian, and Dun & Bradstreet. So some smaller lenders or vendors do not want to pay for that. So I then do my due diligence for my clients, and I report it to them, and Credit Safe updates them, right? And because now it's public, they can pull from those reports. Other debts that are made by the business, so UCC filings, anything that is related to legal, like it was done by the courts, is recorded by Credit Safe. What goes into the score, right? So the credit reporting agencies all use slightly different methods, but the main criteria for scorings are all the same. They might have different weights, but knowing how your scores are calculated are super important, right? What do I mean by that? I mean that when your scores are being calculated by Experian, they may weigh payment experiences way more. If it's being weighed by Dun & Bradstreet for your Paydex score, know that they're looking at your ability to pay, and they're also looking at how fast you pay, right? Because the sooner that you pay, the more payment experiences and your risk score goes down. So they're all calculated differently, and it shows you how to raise your scores more effectively, right? So if you don't already have a pen and paper, I recommend that you get one, right? Because I'm going to show you a little bit more in depth what different agencies use, what different credit reporting agencies on the business side use to weigh different scores. So that way you already know what the criteria is. Knowing the criteria is key to raising these scores or keeping them up. So Dun & Bradstreet scoring criteria, like they look at bankruptcies, they look at liens, they look at lawsuits against your company, they look at your credit card payments. And I'm talking about all on the business side. They look at your bill payments, right? To get a Paydex score, which is their score, the business needs at least trade accounts reporting to their file. And those trade accounts each have to have 10 to 12 payment experiences for your score to pop. I have a lot of people that come to me and are like, Miss Sarah, I don't have a Paydex score. In order for your Paydex score to pop, you have to have payment experiences. So keep in mind that I also see people in these small groups saying to me like, Miss Sarah, like I have 7 vendor accounts and they're tier 1 and tier 2 accounts and my Paydex score still hasn't popped. So the first thing I would say is, do they report, right? Because you can be getting all the accounts you want, but if that account doesn't report, you don't need it, honey. Less is more. We want to choose vendors that report, right? Because those payment experiences and those 3 trade accounts that report to that file, when you get at least 10 to 12, it pops your score, right? Prior to that, you're only going to have a grading A, B, C, or D. So keep in mind that if you want your score to pop, that you need at least 3 trade accounts reporting to the file. And when I say trade accounts, I mean vendor accounts on the business side. And it also can take 60 days for those trade lines to report and a score to be established. So don't think you're going to do it. Listen, I bought this month and that's it. No, it's not the way it works. The business credit score itself is calculated by using as many as 875 payments, right? As many, but most people don't use that. But I'm telling you what the formula is, right? The criteria, again, it's weighed by an average with more weight given to trade accounts that report higher amounts of credit extended. It gives less weight to trade accounts that report to lower dollar amounts of credit, right? So if you have a $12,000 account versus your $500 account, right? It's definitely weighing more on the $12,000 account, right? Because when another vendor comes behind that, they're going to take that into consideration and they're not going to give you a $500 account. They might meet you in the middle and give you 7 or even 10, right? Now, to keep your Paydex scores up, if you can pay one bill, pay the biggest one first. What do I mean by that? Right? Especially with trade accounts, paying that off before the 30 days, the 60 days, or the 90-day terms. And each vendor is different. But most net 30 accounts, pay it off, sis. And again, your past performance in bill payment is the main driver for this number, ranging from 1 to 100. In order to keep your Paydex score going up, make your payments sooner than what they're due. They are looking at how you pay your bills. So That weighs a big factor. The higher the credit score, the lower the risk, the higher the credit limit, right? Because if the risk is low, your recommended lending amount goes up to the roof. And credit safe reports will essentially show you your recommended lending amount. So before you even apply for something, they will tell you, sis, this is what our recommendation is based on your total profile. That's why it's important that you create your profile with these credit reporting agencies and you look through them on a regular basis to make sure that your information is accurate, that they're reporting the right amount of employees, your right address, and a slew of things. That way you control what people are seeing, right? A business can also get a good business Paydex credit score by ensuring that payments are made promptly to suppliers and vendors. Since they are looking at how promptly you pay those suppliers and vendors, and it weighs into that account. I know that was a lot to go over, but let's jump into Experian Commercial, right? And a lot of us utilize Experian on the commercial, on the personal side, but not on the commercial side. Experian has a very large database, and they definitely have their own analytics software. They're pulling from everywhere. They're using public records, scoring, trade information, financial history, court judgments, UCC filings. So if you got an SBA loan, you would see a UCC filing on there. If you got any type of loan that required a UCC filing, they would say it on there. They would say whether your loan is in good and bad standing. They are looking at everything. So Experian scoring criteria is a little bit different. It's called Intelliscore Plus, and they look at a slew of things, right? So your historical behavior, your payment history is 5 to 10% of that total score. Your current payment status, right, on your trade balances and the percentage of your accounts. If they are delinquent, that's 50 to 60% of your score. So one delinquent payment can literally crumble why you've been working so hard for. Your credit utilization, that's usually 10 to 15% of your score. Your company profile, your age of your business, the industry risk, right? The size of your business, the number of employees, that's 5 to 10% of your score. So let's talk about those things a little bit, right? The age of your business. If you're a brand new business, they're not going to be very many people who essentially take a risk on you. You might get tier 1 and tier 2 accounts, but whoever is going to be looking at that business credit risk score report is not going to give you a $50,000 line of credit and you're a brand new business. Industry risk. So we went over this a few weeks ago. There are certain industries that are considered risk, right? Financial, right? Gambling, anything related to real estate. That's why it's so important that if you have marijuana, those are all risky industries. So keep in mind that if you are in one of those industries, it's super important that when you build your profile, you build it not tied to a risky industry. So there is an NAICS code that gets tied to your profile, and literally, if it's a risky industry, a lot of debtors, vendors, lenders are not going to want to lend to you because you're seen as a risk. And that's no fault of yours. So what I would recommend is that your business name not be tied to that, right? So you don't want to put in your business name Sabastro Investments. You're going to be automatically targeted as a risk. Sabastro Gambling or Casino, it's a risk. So keep that in mind. Your entity name should be very, very, very generic And then you can always file a DBA to do business as your brand, right? But if you're building business, it should definitely be under an industry that is not risky. Excuse me, guys. Your company profile, again, gives you 5 to 10% of the score. So the rest, the other 10 or 15 of your score, is based on derogatory items like collections, liens, judgments, and bankruptcies. So keep that in mind. Intelliscore, right? Let's get more into what that is, because they weren't always Intelliscore, right? The score's basis includes the number of trade experiences, outstanding balances, and payment habits, credit utilization, and trends over time. Public record, recency, frequent, and dollar amount, demographics that are on your file, like SIC codes and business size. So SIC codes are tied to industry codes. So again, be very, very mindful of when you're building that profile, not to tie yourself to a risky industry. And literally, the more information you provide to them, they will take, versus them having to collect that information. Like LexisNexis, right? They're in, so Equifax, Experian, pay that, Dun & Bradstreet, they pay smaller credit reporting agencies to collect information. And if you don't make a profile, they're going to make one for you. I can't tell you how many people come to me and say, hey, Miss Sarah, when we do their first initial, like when we look at their reports for the first time, they're like, I don't have one employee, I have 10. I don't know what account this is. I've never opened that account up. I thought this was a personal account and not a business account. They have me down as a trucking company and I'm a local transporter. So all of those things matter. Keep that in mind. As I mentioned, with Experian, Equifax also has scoring criteria, right? So Equifax is the last big one, and they collect utility account information, trade vendor data, public records, right? Like bankruptcies, judgments, lawsuits, and liens, and information from the Small Business Financial Exchange, right? So when you are looking at Equifax, right? Equifax is using, they're not using really vendor accounts, right? Just vendor accounts. No, they're looking at utility account information. They're looking to see if you have a gas and electric in your business name, if you have a telephone line, right, in your business name. They're looking at utility account information. They're also looking at business information from the Small Business Financial Exchange, show your bank rating, making sure that you're in good standing, right? Anything that is reported to the Small Business Financial Exchange. Your wiring data. They pull a slew of things, but Equifax scoring criteria is a little different than Experian, right? They get more in depth, and they are looking at a risk score. So everything that they weigh, essentially, they're a little bit more difficult to give you a score, and they essentially are they either put you in two categories: either you're a risk or you're not. So a little harder on us, right? So current collections, liens, bankruptcy, and other derogatory public items or records, including status, recency, frequency, and dollar amounts. They can lower your business credit scores, increased trend in slow payment of obligations, What does that mean? That means that if you have net 30 accounts and you're waiting to the 30th day to pay, they judge. So pay your accounts ahead of time, right? The increase in number of business credit inquiries or applications generated by the business owner or business owners. They're judging. The number of trade experiences, balances, outstanding payment habits, and credit utilization and trends over time. These things all can lower your business credit score, so keep in mind of that. Okay, so short TIB, lines of business, or SIC codes, right? The size of your business and other demographic information. They judge you based on, we call it redlining, what your zip code is, the size of your business, if you're a risky industry, the line of business. They are judging. What can raise your credit score? Generally, the reverse of what can lower your business credit score. Some of these steps take time. Be patient. Like, that's the biggest thing, right? Great business credit can be built quickly but ethically, but not immediately. What does that mean? Like, please, 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 please do not go buy a trade line, right? Do not go buy a shelf corporation that's been sitting for 10 years. They can tell, this analytic software that they utilize can tell that that company has been dormant and now all of a sudden you're doing business under it. They can tell that you're a brand new business. Sis, how do you have $100,000 line of credit and you just opened up? They can tell, and what they do is they scrutinize you and deny you immediately. So keep that in mind. I want you to understand that building your file ethically is going to take time, but it can be built quickly. It's not immediately, but it could be built quickly. Let's start off with some things that you can do, right? Raise your business credit scores. Pay on time every time. Do not miss a payment. Put an auto payment on. Please, 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 please. Pay on time every time. To get the most favorable funding, pay bills on time. This means that if your paydex score of 80, Equifax credit risk score of 60 or better, for Experian, your historical behavior payment history of 5 to 10% total score, right? With that, you can go get a car, sis, in your business name. You can go get a line of credit, right? For SBA loans now, you won't be approved with a low score. Chances are that the SBA lender won't even submit your application if your score doesn't meet the threshold. So everybody has what we call requirements. And we ahead of time need to make sure you meet those requirements. We're not applying on your behalf, period. How well does your company pay its outstanding invoices? I know a couple out there that think that, hey, this person who does invoicing does not report, especially us truckers, even on the commercial construction side. So I got a little bit more time. It's usually net 30 or net 60, but I'm going to play my hand and I'm going to pay them net 90. And then they meet somebody like Miss Sarah, who will be like, hey, sis, do you want me to start reporting your outstanding invoices? And they will gladly pay me to report them. So then they come to me like, I didn't know that you report because it's not listed. Well, that shouldn't be contingent on the way that you pay me. You still owe me, right? So just keep that in mind. How has your business payments performance changed over time, right? So they're going to look at how you started versus where you at now. We talked about payment experiences, right? To raise your business credit scores, the more business payment experience that you generate, the better, right? Develop payment experiences for your business. What does that mean? That means if you have 3 to 6 vendor accounts, for me, I always advise my clients that you should be purchasing from them every 10 to 11 days. You should have 3 payment experiences within a 30-day period, right? You said you wanted to build your score. And what most people don't understand is that building business credit is an investment, right? You need a little bit of money to do this, right? That means that if you're buying household items like toilet paper, toothpaste, and cleaning supplies, since we're not buying it at home this week, we're going to do it under our business because we need more payment experiences, right? So changing the trajectory and how you look at things. Garbage bags, we always need garbage bags, right? The more business experiences, the better. But if you want your scores to pop, and once your scores pop, then you can slow down, but you need your scores to pop. So the more payment experiences, the faster you pop your score. This means using your credit or financing. It means paying everything back one time in full every single time, right? Usually all you have to spend is $50 to $75. I always recommend $75 for them to report it. And I'm sure you're doing that anyways for things for home. So come on now. Talk about trade references, right? So payment experiences will matter for the most if the creditor reports to credit reporting agencies, but even non-reporting creditors can help, right? So once in a while, like I love Amazon, right? It's what I do, but it does not report on the business side. But I love that I have a business Prime account, so I can order something today and it will get here tomorrow. I have a business Instacart account. I can order something from anywhere. If I'm in my Atlanta home, 2 hours. If I'm in my Maryland home, yesterday I ordered from Staples because I considered sending my admin, wasting gas, then they may not have what I want. No, 2 or 3 hours, she could be doing something else. I could be doing something else. So Instacart it out. In an hour and a half, it was here. Then I also ordered from Costco, waters, just when people come to my office, snacks. So they don't report, right? But because I have business accounts, I then take that information, right? And when I'm going to get a trade who does report or a vendor who does report, I ask them for a reference or I write in the reference myself. And my account manager, who essentially should be assigned to you when you open up a business account, and you know, the ones who call you and say, hey, Miss Sarah, do you need anything? We have paper on sale this week. Or if it's Instacart, hey, Miss Sarah, like, you know, if you need anything, don't hesitate to reach out. I have Build because we do construction. Hey, Miss Sarah, I sent you some floor samples. If you need anything, let me know. And then I can just go to them and be like, hey, do you mind giving me a trade reference so I can add on to my reports? Or so I'm applying for this line of credit, or I'm applying for this credit card and they're asking for trade references. Do you mind that I put your information down? And they're going to be like, sure. Because I use them all the time. They just don't report. And guess what? When that lender or that vendor is overlooking my application, right? They call them and that account manager says, Sarah's great to work with. Sabastro Enterprises is literally, they purchase from me all the time. They're very easy to deal with. They pay their account in full at the end of every 30 days. And guess what? Now you have, they even go as far as asking them, how much is the line of credit that she has with you? And then they extend that to you because how long has she been with you? Because of your experience. So trade references can be very, very important. It goes beyond numbers. So definitely consider that. So what kind of things can you do on your own to raise business credit scores and give the credit reporting agencies what they want, right? I would definitely check my business credit reports regularly. You want to make sure that your information is not incomplete or missing altogether. Always update your records. with all of the credit reporting agencies when there are changes. Now, these kind of things can be ownership, overall number of employees, your business entity, locations, new addresses, phone numbers, all of that matters. Run your company financially responsibly. This means retaining enough assets to cover your business downturns, right? It means not overspending. It means not taking on more debt than your company can handle. They may give you 100,000, but you be like, nah, I just need 50. Handle your company's financial responsibility responsibly. DNB in particular looks at chances on a company that it will go bankrupt in a certain amount of time. So take steps to keep your business finances out of the red. All right, raise your business credit scores. Keep your trade payments in line. Pay rents and utilities on time. If your business can't, talk to your providers. All right, the communication piece, right? We're going through a hard time and I'm not going to be able to make a payment. What can I do? This normally doesn't happen, but these are my circumstances. Maybe you could work out a payment plan. Consider ways to cut your expenses if you can't keep up. Staying out of legal hot water, right? So many people just literally do not put themselves in a position where they're staying out of legal hot water. You can't prevent every lawsuit, right? But if your business always honors its contracts and obligations, it will go a long way from staying out of court. The other legal issue is accidents. Keep workplaces clean and obstruction free. Have insurance. Get a risk assessment that can be done by your insurer. They're in the business of loss prevention, and you should be too. Because even if you're a limited liability company, right, your reputation matters and things of that nature. You don't want to be in that position. Know the codes. Your business has 2 kinds of codes, right? You heard me mention several times the SIC codes, which are your standard industrial classification, and your NAICS code, your North American Industry Classification System code. Both of those codes determine the industry that you're in, and they're tied to your business credit reports. Industries can either be restricted or a high-risk industry. In general, restricted and high-risk industries have some things in common, but there may be high risk of injury on your job, right? Or the industry may engage in a lot of cash transactions. This is true no matter what the safety record of a particular business is. So, on the other hand, the majority of its transaction types also matter, right? You're only a cash-only business, you're seen as a risk, right? That's why they have merchant accounts and those type of things. Per the SIC, these restricted industries include and I'm just going to name a couple: energy, oil trading, petroleum extraction, production, pawn shops, cannabis. Let's mention some that you guys have: investment, real estate, casinos, anything gambling related. So per the SIC, the following industries are high risk: auto, recreational vehicle, or boat sales, travel agencies. So these companies are subject to stricter underwriting guidelines. Be honest when you choose yours. There's no reason to choose the riskiest code, but if a less risky one may apply, then choose that. And keep the name of the high-risk industry or restricted industry out of your business name, please. very generic name. I mentioned that earlier. Chico's bail bonds can be renamed just as Chico's, right? And then you could always do a DBA underneath of that, but this is above board and honest. You're not lying. So increase the most recent high credit used, right? Credit issuers determine how high a credit limit to issue is based on how much you spend monthly and how recently you spend it. So don't get a credit line and not use it, because if you don't use it, they're not going to raise it. To get approved for limits more than 10 times of your existing limits just by monitoring and increasing your recent high credit used. What do I mean? I put everything on my business cards. We talked about this yesterday. I even go as far, I'm a points person, so listen. I was telling them that my Southwest Chase card, I paid my taxes for my houses on there. And because of it, I had to pay it anyway. So, and I pay it off immediately. But because of it, I'm able to, my husband is able to fly for me with me free through Southwest. I have a companion pass. Points, right? You have to pay that anyways, right, sis? So think about it. So for me, I do that because there are bills that I have to pay anyway. So instead of paying them directly out of my business account, right, just writing them a check, I use a business credit card specifically for those expenses. And then I pay it off, net 30. So keep that in mind. And use credit often so you can get more credit with every approval. Oh, she can handle $20,000. So now we can give her 30. Paying your utilization. What does that mean? Credit issuers want to see that you're using your credit, but maintaining it wisely. They monitor these stats to approve decisions. Get approved for limits more than 10 times of your existing limits just by monitoring and responsibly managing your utilization. You cannot have your utilization at 50 and ask for more credit. They're going to be like, you can't even pay that down monthly. Addressing adverse accounts. Negative payment history can diminish your ability to get loans and credit cards. So it is important that, you make sure you don't have any negative payment history, or if you do, that you are contacting that creditor and asking them to remove it. It can increase your rates and payments on credits and loans you do get. So know which accounts are reporting adverse on your credit history and contact that credit reporting agency or the credit issuers to remove it immediately. Correct these inaccuracies ASAP. Add more positive history to offset the negative. All right. Monitor your business credit. You will never know what's going on unless you check regularly. I have alerts on mine. I'll be stalking them. So don't get too busy that you don't check your accounts. Monitoring makes that easy. We make it affordable, right? Save over 90% of Experian, Equifax, and Dun & Bradstreet by, talking. We could do it through one of our customer success advisors. Amy could help you, but like NAV is where it's at. Because if you're going to go through me, right, I'm going to ethically sign you up with each of them. And there's going to be a fee directly to them, not to me. But NAV, you can do all three for up to 3 businesses. And they'll do alerts too. But know what's going on your reports. Monitor it, stalk it. It's your responsibility. All right, recap. Start with a Dun & Bradstreet and at least 3 payment experiences to even get literally a profile and an A, B, C, or D. To get an actual PAYDEX score, you need 10 to 12 payment experiences. But start with 3 vendor accounts. New business credit scores tend to be low. Credit reporting agencies all have slightly different criteria for scoring, but results are very closely. But it improves one But what improves one will improve all of them. Keep that in mind. Start improving your scores with on-time payments and responsible financial stewardship. It's super important for you to be financially responsible. Work with tier ones to get the payment experiences. Ask for trade references to give credit reporting agencies the data they request. Keep trade payments in line so you can stay out of legal entanglements. Address adverse accounts or SIC or NAIC codes that may keep your scores down. Increase the most recent high used credit cards, but watch your utilization, pay them off, and monitor your business credit reports. Right? I know we went through a lot, but the hope is that you are literally doing your part to keep yourself aligned. It's your responsibility, right? No one can address those things, and you got to start somewhere. So please don't think that you're perfect, right? And what you should be doing what I see is a lot of people have more than one business, but what you should be doing for one business, you should be doing for the other business, right? It is your responsibility to even throw that earnest on the wife or the husband or your family members, right? Do your job to educate other people. All right. Does anyone have any questions? If you don't take anything away from today's show, please run your company financially responsibly, right? It is your responsibility. And I'm not saying that it's going to be perfect in the beginning, right? You got to start somewhere. But please run your company with honor. No one is perfect. And literally tune in every Friday at 10 a.m. I always try to jot some jewels financially. I definitely appreciate you guys tuning in. If you haven't already done so, join sheisstilldope.com, right? And also follow my Facebook group, right? Biz Credit Builds or Sarah Sabastro, or on Instagram, you can find me at the official Biz Credit Builds, or I am Sarah Sabastro. It was great having you guys on. I appreciate you guys tuning in, and I'll see you next week. Bye.